Hey everyone, welcome back to Corporate Decoder, the place where we figure out what companies are really up to, and today we are cracking open Upstart's latest report. Are they up or are they down? Well, let's just say that AI might need a bit more I and less A. Stick around, we'll decode all of it. This report from Upstart, a company that uses AI for lending, shows us a peek into their first 3 months of this year. We'll simplify the big numbers, see where they're making money and what challenges they face. We also have a Discord community linked in the description below, so join us there for even more insights. First off, this is a Form 10Q, which is like a quarterly checkup for publicly traded companies. They have to tell the Securities and Exchange Commission, or SEC, how they're doing financially. This one is for the period ending March 31st, 2025. And yes, this is a quarterly report. The company we're looking at is Upstart Holdings Inc., based in San Mateo, California. Their stock symbol is UPST and they trade on the NASDAQ. Now, a quick heads up, this report contains forward-looking statements, which are basically guesses about the future. The company uses words like expect, plan, and believe, but like any prediction, things can change, so don't take these as gospel. Here's what we will cover. We will look at financial info, what management thinks about the results, and some risks that Upstart is facing. Alright, let's dive into the first big table, which is the balance sheet. This gives us a snapshot of what Upstart owns assets and what it owes liabilities. Remember the key formula, assets minus liabilities equals stockholders' equity. First, they had about $600 million in cash at the end of March. That's a pretty big drop from the end of last year when they had about $788 million. They used a big chunk of their cash. They also have loans valued at around $815 million. The interesting thing is that while they have less cash, the amount of loans they are holding hasn't really changed, indicating that their loan business has been relatively stable. They have about $83 million they owe to investors. This is up quite a bit from the end of last year. They owe about $1.3 billion in borrowings, so they are using debt as a way to juice their business. This table tells us about Upstart's income and expenses. Their revenue from fees was $185 million, a good jump from $138 million last year. More fees are good. Interest income actually went down, however. The fair value adjustments were much better this year. This is important because it means that in simple terms, the loans they hold didn't lose as much value as last year. They spent almost $60 million on sales and marketing. It's always worth checking how much they are spending to bring in revenue. They spent about $58 million on engineering, so they continue to invest in their AI model. About $61 million went to general admin. Here is the key number. Net loss for the quarter was just $204 million, compared to a loss of $64.6 million for the same time last year. This is a massive improvement. Their net loss per share was almost zero, a huge improvement from last year. Now, let's talk cash flow. This section shows how money is moving in out of Upstart. Again, we see their net loss, but this time we are seeing how it affects their cash. As mentioned before, the change in the loan values have a huge impact. They spent over $1.3 billion on loans to be sold, so the business of selling loans is very active. They also got back $38 million from loans. So in the end, operating activities used $13.5 million. This is a small amount, but still a cash outflow. They spent $150 million on loans they intend to hold. They received almost $60 million on loans. In the end, $78 million cash was used in investing activities. They borrowed almost $54 million from warehouse borrowings. They also repaid a big amount, about $122 million of warehouse borrowings. After all of this, financing activities used $44.7 million cash. Overall, their cash went down a massive $136 million for the period. Their restricted cash increased, but we don't have to go into it too much. The rest of the report goes into how they account for everything. We won't go into all of this, but it's there if you want to check it out. They're reliant on 3 customers who are responsible for much of the revenue they bring in. If they were to lose one of these customers, it would affect the business. We also see changes to their loans and values. This discusses variable interest entities, VIEs, which are basically partnerships they are in. Here they talk about goodwill, which is basically the value of acquisitions that doesn't fit neatly into existing assets. They are involved in some legal proceedings. This can get expensive, so it's worth keeping an eye on. They have settled with the SEC on a review, and the SEC will not be going after them. This is great news for the company. But now on to the risks. Every company has them, and it's important to know what management is worried about. They have little control over the economic conditions in the markets they participate in, and that can affect their business results. The company depends on keeping a good flow of funding, and they need to keep attracting investors. Without funding, they can't grow. The business relies on its AI models and keeping them functional, so it has to make sure its models don't stop working. The company depends on a couple of key partners and can't lose them. That would hurt their business. The company may continue to incur losses. Reputation is key, and bad press can hurt their ability to get new partners and users, which is another thing that has happened in the past. So, what's the real story here? Upstart seems to be on the mend after a rough patch. They're showing signs of recovery and have put a lid on all that cash leaking. They have lots of regulatory risk as well as model risk, but they seem to be on top of this so far. Looking at these numbers, there's potential, but it's not without risk. The over-reliance on a few key partners is concerning, and so are market rate changes. The ability to maintain their AI innovation will be key. Findu's Upstart is on the right track if they can smooth out the bumps and find some consistency. Alright, that's our breakdown of Upstart's latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.